Hello, everybody, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, January the 23rd, and the year's 2018. Keeping it simple, too. You might ask, why do you have to do two videos if you're talking about keeping it simple? Well, the reason I decided to keep with the topic, in fact, I might keep it going all week. I see there's some other people out there talking about keeping it simple, just doing one thing, one simple system, and just, but it's funny, I think, because when you look at it, it's not really simple. They're not, to me, they're not doing things that are simple. They may seem simple, but they're usually conceptually based, which means it's just what somebody thinks as opposed to what's actually happening in the real world, the real market. So that's why we're gonna keep along the keeping it simple. Along with keeping it simple, money and risk management. It's really simple. You decide how much money or what percent of your portfolio you're willing to lose on a single trade. It could be $10. It could be 1% of your account, 2% of your account, a half a percent of your account. You decide. It's up to you. There's a lot of people telling you, well, you should do this or you should do that. Well, I'm telling you, you decide. Some people want advice. But in trading, you have to learn to be on your own. You have to be independent, self-reliant. You have to trust your own counsel rather than try and do what somebody else tells you to do. Yeah, there's a lot of books out there that tells you how to do things, but I mean, how many books have produced, successful traders? That's what you have to ask yourself. And position size. Well, if you know what your risk is and you know what your stop loss is, then you get your position size. Or on the other hand, if you know what your risk is and you know what your position size, what you want that to be, then you know where you need to put your stop loss. It's that simple. That's all you have to do. There's nothing more. There's no magic to it. I mean, one screen keeps it simple. Don't need a book. Don't even need a chapter in a book. I mean, most of it would be fluff because this is all you need. This is all you do. There's nothing more to it. Along with keeping it simple, you have a candle chart. I mean, back in the old days, let's see. If you hit the no. There's your tick chart right there. That's what's going on tick by tick. So, properties. We can choose a bar chart if we want. Some people like bar charts rather than candles. Or we can do a line chart. I mean, this is simple. You can see where price is. Line. This is the closing. Some people want to know the high and low, and that's why. Oh, and I'm clicking this. You can hit the F8 key as opposed to right-clicking, but at least this way you see how I get there. Some people like candlesticks because it gives you a little more information. Tells you the high and low and the open and close for each time period. In this case, we're looking at daily. See, that's reversed. And the little buttons indicator, in case you're wondering, it's just the one I modified. My modification, just so you know, was to show you what color the candles are on each time frame, and for that time frame what color the candles are on all the pairs, and the one you're looking at's reversed image or reverse video, whatever you want to call it. The background and foreground are swapped. So we're looking at the euro here, and you can see it looks like it's going up for the day. Looks like it wants to break out, make a new high. So I mean, the goal of trading is just to basically pick the direction. I mean, really, that's what you're doing. You're picking direction. You believe that from this moment forward, price is going to either go up, or you believe it's going to go down, and you place your bet and you sit back and watch what happens. Okay, now you place your trade. That's just my sense of humor. But really, that's all it is you're going to place a trade and see what happens next. And because you don't know what happens next is why you use a stop loss. So in case you guessed wrong at this particular time, price goes against you, you only lose so much. And that's one of the things you can control in trading. You can control how much you lose. Now, barring the unforeseen X factor circumstances, sure, you could place a trade. Next thing you know, there's some catastrophic market event, and the price moves like 500 pips in the blink of an eye. You know, a fat-fingered trade or something, and yeah, you could get wiped out like that. But barring those unforeseen circumstances, where price moves in a pretty much normal fashion, you're not going to get wiped out. Your stop loss will get hit, and then you'll live to trade again. Because I read that somewhere. They said, you know, trading is a game of survival. You want to, you know, you want to not get knocked out of the game. Never thought about it that way before, but it really is. So once again, you know, we can keep it simple. We don't have to do anything complicated. And so yeah, looking at that daily chart, wow, I guess that's boring, right? Well, you can drop down to M1 if you really want to see closer action. But just remember, this is nothing but ticks. You know, we have these every minute. We sum up the ticks and we get a high and a low and an open and a close for that minute. But it's just a bunch of ticks, a bunch of trades happening. For those of you who know, tick is a trade. And so you can see which way is price moving. Oh, it looks like it's moving down, doesn't it? So I would assume if price breaks this level, shorts are probably going to start profiting. Now it looks like it's moving up. And so it's up 2 pips from that line. 2 pips, that's about 2 spreads, I believe, on the euro. And if you hit the F9 key, you can see it. Yeah, it looks like we've got a 1 pip spread there. And you can watch tick by tick. And right now it looks like price wants to go down. They're really trying to make up their mind if they want price to go up or down. I think it's going to, oh, now it looks like they want it to go up. Now, why would you want to look at a tick chart? Well, to me, it's kind of simple. I'm going to let you in on a little secret here. You see this peak? If the doesn't drop below this, chances are price is going to go up. And you see here this low, as soon as price cracked that, you see what happened next? Well, so yeah, I gave away a little secret there. But unfortunately, you know, thousands of people don't watch this video, or maybe fortunately. But that's pretty much, and you see here, price broke that, so price is going to go down for a while. And price isn't going to go up until it moves past that point, unless it keeps going down. So right here, the bid has to get above here for price to go up. Otherwise, it's not going up. Okay, it just snuck up just past it a hair right there. Now, price isn't going down unless it gets below this point. And that point keeps moving up. Do you see that? Did you see what happened here? It broke that, and now it's going up. So, and now you see how it broke that. Now price is going to go down. And right there, it keeps coming. You see here? Right there. So the bid has to get above that. And so you see, you're looking at a couple of pips. This is how you can, you know, if you really want to scalp, sometimes all you get is the spread, which is here is like 1 pip. You know, sometimes you can get a couple more, but you can pip them to death. So right here, you saw price break that. So once the ass broke that, you'd be in at 23 or 22.73 right here. Well, now you can turn around and get out for 3 pips at 22.70. You see, somebody asked me to show them like a live trade or something, but you see, I'd rather teach you how to put the how to, you know, bait the hook, tie it to the line, you know, and all that. Okay, right here, you see that the bid came up through the ask, so you would have been in at 22.69. Okay, and you see you're at 70. You just got 1 pip. And you can do this all day long. And it's kind of like playing a video game. So you see here, once again, this is all data compression. Okay, you see that line right there. Okay, now, since I showed you that, I might as well, this is what I've been working on. You see the green line and the red line, that's the maximum that the bids hit, and the blue line, that's the minimum that the ask is hit. But then you see these red green lines, those are the trigger lines that I just showed you here. And I added this to the TRO 2018 tick chart indicator that I sent out. So those of you who donated so far for 2018 will be getting this update in the next batch, in batch 2. So, and this is how you can use it. So once again, you hit F9 and you can see that's right there. I guess maybe it's hard. I have to decide. Of course, the inputs, you can change the colors. I used purple for bid and ask. I'm thinking maybe I should switch it over to pink and blue. Let's just see how that looks. My color bid is, does that look like it? and my color.